Hey, what's up, y'all? It's your boy King Yedaya. Greetings, greetings, aka King Solomon, staying wise in life and in these markets. Um, right now, today, I want to talk a little bit about fundamental analysis, and it's something I'm gonna be incorporating more into my trades and stuff like that. Um, Technical analysis is good. It's good for price chart reading and stuff like that, but on a bigger picture, the fundamentals of the economy and of foreign currencies and their interest rates and stuff like that, it's something that affects the price or the market of forex a lot more than people kind of give it credit for. It's kind of like the foundation of what price moves off of, so let's say we have this let's see, let's go to the daily chart here, right? And let's say, for instance, this is GBPAUD. Now I'm in a live trade in GBPAUD, right? Off of I took a sell position right here for the continuation of the move lower, right? So let's say for GBPAUD, right? For the move lower, this means that the Australian dollar is strong, right? So it's the counter currency for GBPAUD. So if the odd is the Australian dollar is strong, that means that GBPAUD, if the British pound is also weak, is going to move lower, right? So if the Australian dollar is stronger than the British pound, that means that the GBPAUD pair is going to move lower, right? That means that people are buying the Australian dollar and they're selling the British pound, right? So let's say the Australian central bank, the Bank of Australia, or whatever it is, right? Let's suppose that they want to weaken their dollar, because this is the thing, right? They are a major exporter. They export commodities and stuff like that, right? So people have to buy their currency to export, to buy copper from them, right? Because if you enter in an Australian market to buy copper, you need to buy copper with the Australian dollar, right? So these foreign currencies, they're going to come, especially like China. China is a major importer of copper from Australia, right? So if China is constantly buying copper from Australia, which is in turn driving up the price or the strength of the currency of the Australian dollar. So the more they buy the Australian dollar to use to buy copper, that's how the Australian dollar keeps moving higher. So if the Bank of Australia sees this and they think to themselves, like, damn, this is making our currency more and more expensive to buy, because as the Australian dollar goes up, let's say the Chinese, they're coming in and they're buying the Australian dollar constantly, right? But they've noticed that it's increasing in price, so it's getting more expensive for them to buy copper from Australia, right? So now the Australian bank would see that, okay, maybe the Chinese are pulling back a little bit on buying copper because it's too expensive, right? The Australian bank will then take measures to decrease the value of the Australian dollar. Maybe they would do things like lower the interest rates, right, to make it less appealing for people to store their money in Australian dollars. Because if the interest rate is high, that means you get a good return on your investment. But if the interest rate is low, you get a lower return on your investment. So it might be profitable for you to store your money in something other than the Australian dollar. So if you get that incentive, like, oh man, the Australian dollar, the interest rates are low, you're going to sell the Australian dollar and buy something else. Maybe you might buy the New Zealand I don't know what it's called. New Zealand dollar. I was maybe thinking it's called a franc, but yeah, maybe the New Zealand dollar, you would go up to buy the New Zealand dollar instead, or the Swiss franc instead, or you might buy the JPY instead, or you might buy the USD instead, right? Just to store your money to get the maximum interest rate possible on your money. So this is where the fundamentals start coming in on why something would do something at a certain point, because we have this uptrend here. GBPAUD is moving up, right? And then all of a sudden we got the double top, and then we're moving lower, right? So it might be the case that the Bank of England is thinking to themselves, you know what, our money is too strong at this point, so we're going to weaken the GBP and get it to move lower against the Australian dollar. No, it mightn't be against a particular currency in as the purpose, but it's just to weaken their own currency, because they want to import and export without it being too expensive, right? So they might lower their currency, which would cause now the GBP to move lower against the Australian dollar. Now the Australian dollar might do the same thing. They might, okay, let's weaken our currency as well, and you would get both of them weak, and they would just go sideways, right? So this is how fundamentals kind of ties in to the price and the technical analysis of what actually is going on the chart, right? So the reason why I did this video here at this point was that we have at 7:30 p.m., which is right now is 7:38 p.m. So at 7:30 we had this release. This is a fundamental news release on www.forexfactory.com. That's the financial calendar for Forex and for basically anything you're trading. Once you're trading, you should have these up and know what's going on, right? But it's mostly for Forex, I guess. And at 7:30 we had this news release. So this is let's see what it's called, goods trade balance of the Australian dollar, right? Or the Australian economy, right? So let's read the notes, right? Trading goods makes up about 80% of total trade and therefore provides early insight into the trade balance data reported about 10 days later. A positive number indicates that more goods were exported than imported. Source first released in April 2020, right? So the usual effect is actual greater than forecast is good for currency. So that means the actual greater than the forecast, which is a higher number than forecasted, will make the Australian dollar go up, right? So now why traders care, or why should we care about this release, right? Export demand and currency demand are directly linked because foreigners must buy the domestic currency to pay for the nation's exports. Export demand also impacts production and prices at domestic manufacturers, right? So this is why you should pay attention to it, because it affects the cost of the dollar in the buying and selling for import and export, right? So the actual greater than the forecast is good for the currency, right? So let's see what happened. Let's see if we get a number here, right? So we don't have the actual number, hasn't come out yet. Yeah, it hasn't come out yet. But we can look at the let's look at the chart now and see what happened, right? Because it came out at 7:30. It says that actual greater than forecast is good for currency, meaning the currency would move up. The Australian dollar would get stronger, right? So let's see what actually happened. So let's go down to the 15-minute chart. Let's see how major investors responded to this this news release. So this is the 7:30 candle, right? So you see the previous candle was pushing down. Big red candle, good volume, right? Now for the 7:30 release of that fundamental analysis, what is it called? Good trade balance, which says that actual greater than forecast is good for the currency. Now we haven't received the number yet, but we can see that this candle is now pushing up, right? So that means most likely the actual number was greater than the forecasted number. So that means the Australian dollar is now pushing up. No, actually, yeah, I have that wrong, right? Because if the Australian dollar is pushing up, that means that it would have continued pushing down. So seeing that the GBPAUD is pushing up, that means that the Australian dollar has gotten weaker. That's why this is pushing up, right? So GBPAUD, meaning the counter currency is odd, it has gotten weaker, meaning that showing now that we have this big blue candle pushing up. So the actual number might be less than forecasted, right? So these are kind of like how fundamental analysis actually affects the price, right? Because right now I'm in a trade. This is my first sell entry, right? But just because we have that fundamental news release, we might get a pushback up back to my entry. Now we're already in kind of a congestion area, but as you can see, it was pushing down, made a lower high, pushed down, created like a level here, or respecting the same S1 level around this area here. So it didn't make a lower low, actually it made a slightly higher low. Then we had this push up here, and for the pull down, where we could have actually went a little lower, right? Because of the fundamental analysis news release, we might have a higher low being formed, right? And it could actually go back into congestion a little bit. So yeah, I'm just trying to get a little more familiar with the fundamental analysis of things. And I read this book by Coulling, right? It's called A Three-Dimensional Approach to Forex Trading, and it really breaks down the fundamental analysis of Forex, starting from, you know, the country's economy, going into its currency, what kind of currency it has and why it has that kind of currency. Is it a risk on or risk off currency? All these things are very important to know while choosing a pair, right? For instance, I recently started looking at the odd Swiss, right? And the reason I chose the odd Swiss is because it's like a counter currency. The Australian dollar is a risk on currency dealing with commodities, right? And the Swiss franc is a safe haven currency, which meaning that when there's a risk off environment in the markets, people store their money in the Swiss franc to just as a safe haven, right? So it's called a risk off currency. So if you're trading, in the market, it's either one or the other, right? It's either a risk on environment or risk off. Now it could be neutral, right? It could also be neutral because markets go up, they go down, and they go sideways, right? But just keeping it simple, it's either risk on or risk off. Even if a market is moving sideways, what was the trend before it moving sideways is actually still the trend until we get a break, either in a counter trend manner or in a continuation. So the market is either risk on or risk off. So when you trade something like the odd Swiss, or you trade something like the GBP JPY. GBP is basically a risk on currency, while JPY is a safe haven. GBP USD is a risk on, risk off currency. So that's how I kind of pick my pairs to trade. It's either risk on, risk off. I don't really like to trade stuff like GBPAUD, although it's like it came recommended from other traders that I look at on YouTube. So I kind of follow what they're doing, but I gotta cut this video short. So as you can see with the news release of the good trade balance for the Australian dollar, which is, as we said again, actual greater than forecast, is good for the currency. We still haven't received a number for it, but judging from how the price has reacted, I would say that the actual number is below the forecast. Because let's see what time it was released. From this candle here, we have a steady push up. So this is a way that the fundamental news releases affects the market. And I think probably from this area, they were probably expecting it to affect the market in a way that I guess the Australian dollar would go down in value, because from this area we got support. Now on the chart it looks like it's a support zone, right? So why is the support zone here though? This is what we're trying to get at with fundamental versus technical analysis. So why does the price stop here? Why is it stopping here? We can see that it's stopping here. We don't, if you just trade price action, we don't need to know the why too much, I guess. We just know that this is a support zone, right? We draw that up, boom, and that's our support zone, and we're good with that. But professional traders don't just operate on what they see, it's what they know as well. So in an attempt to be more like a professional trader, who these guys, they have their Bloomberg terminal feeding them all this information, all this news, the why this and the why that, and when is this and when is that, like all this information coming in, they're making trade decisions based on it. All the central banks are making trade decisions based on it, and it's their decisions that affect the price pattern, or the pattern you see on the chart, right? So instead of just being behind the ball so much and we following what they have done, like let's say they sold here, GBP, or they sold here, right? They had a reason for doing that, and it entails some fundamental analysis, right? So if we're privy to somewhat of the same information, let's utilize that information. So when we come to this point here of a support zone or resistance zone, we know exactly, it gives us more confidence in our trades to know exactly why we're going to sell at this point, or why we should place our stop loss right here, because we know that the British Central Bank, or the Bank of England, they want to sell at this point because of these fundamental analysis in certain economies and stuff like that. They want to sell. So it gives you more of a confluence, it's more correlation. You take your trade with confidence, and if it does stop you out mentally, it's even better for a losing trade, because there was a perfect reason for why you made your trade. It just didn't work out, but it's better because trades that you take that you didn't do your due diligence, right? You had no reason really for taking this trade. When you lose those trades, it hurts more than when you take a trade with confidence, with confluence behind it, with fundamentals behind it. You know what I'm saying? So yeah, man, it's your boy King Yedaya. I'm gonna start to embark more on these fundamental analysis of trades and stuff like that. And you know, stay tuned, man. We're gonna improve as a trader. We're gonna get better. We're gonna incorporate more things. And just as a side note, you notice like I don't have any moving averages on my charts anymore. I'm gonna start moving away from having moving averages. Now they're still there. I'm gonna check on them from time to time, right? Like they're still there. I still have them plotted. I'm just, you know, I'm muting them out. And the reason I'm doing that is because I want to get into the kind of trader I am is technical analysis, meaning price action and volume. That's what I trade off of, and Fibonacci levels and Camarilla levels. So this is what I do when I trade. I pull fibs, I set levels, I follow volume point of control, and I follow Camarilla levels. You see how these Camarilla levels are getting respected here? This R3, all these rejections here, right? All these rejections here held this level at R2. That's all I need. I don't really need a lagging indicator like a moving average, right? Because it just shows what I already know, right? I already know that this area here is resistance. I already know that this area here is resistance where it hit the 50 moving average, and we were like, oh, it's respecting the 50. I already know this is a level here to respect. I don't need the average there to tell me that. I know this is a level to respect. You see this level right here? This 50 doesn't tell me anything new, right? But I'm gonna keep it there for like if I'm managing like let's say I want to exit, or I just want more confluence or correlation to exit a trade. It's like for trade management maybe, you know. And the one I'll use most for trade management would be the, let's see, this one, my 7 EMA. Let me make sure I make that a 7. My 7 EMA line. So when I'm following certain trends and it breaks above and closes above, I might close out my trade, right? So that's how I'm gonna be using my moving averages from now on. They're not gonna be plotted on my chart no more. And what I'm gonna start using more is my let's see, my volume profile, because this too now is levels within volume, right? So we have the VPA, which is volume price analysis from the bottom here, and then we have VAP, volume at price analysis. So this shows you all the levels here of high volume and how much effort it would take to push through these levels of volume. So this level of volume here right now is kind of high. You can see that the triangle or the bar has gone all the way out here. So we're getting a lot of resistance. Now if we do break through this R3 level, you can see the resistance is getting lower as we get to the R3, so we might break through the R3 kind of easily. So yeah, that's for further videos though, on like how I'm gonna use VAP and VPA, volume price analysis and volume at price analysis, you know. Alright y'all, so stay with me on this journey. It's your boy King Yedaya, aka King Solomon, staying wise in life and in these markets, and y'all stay blessed.